back to another Trading Fibs video. We're just going to go over the Amazon pick we had last week. I'm going to go over the gold chart and the micro E-minis S&P 500 chart. I'm going to try to run through this as fast as I can. It's kind of late on a Friday night, so let's get started. Here's the Amazon chart last week, and I said, let's see, I know there's a lot of lines on here. Let's move some stuff around. I had an entry at 224.14. That was on August 25th. I think I made that video. I'm going by the trend lines that I drew. So I drew that it was going to come down to 22.14 and then continue higher. So I don't know about the move any higher than where we're at right now. But as price was moving, we had a downtrend that broke our trend line here, and it was a false breakout at that time, and we were retested our support on our 61.8 fib at 22.14.71 was that actual fib. I think I said 22.14 for the entry. I think that would be close enough. So your entry was there. We broke through the trend line for a stronger confirmation. At this point, I probably would have added. And then as we're moving up through these price ranges, profit should be taken. Stop loss should be moved up. Once we break this price line here, we need to be looking to get more profit taken. Now, this was my first target at the 123.6 fib at 237.94. We haven't reached it. Not even sure if we will. So all profit should have been closed at 233. Okay. So at this time, Amazon trade is done. I'll come back to it another time, depending on if this move breaks this trend line, because I was anticipating a higher move for an E-leg up, maybe somewhere in the 250 range, but short term is telling me that we may have an early trend change because we are breaking 232.65. All right, this range right here, I'm going to shadow that. And following the MACD doesn't give me any indication yet of any divergences. So right now I'm going to say that this is a trend change, and on a lower time frame I would try to count waves, but it's not worth the time right now. So anyways, you're welcome on this one. That brings me to the next point, that if any of these charts are helping you, I do have a donation page here on the YouTube channel, Mr. Fibonacci Trading website. It's not really complete, but it is secure, and there is a donation spot there, so anything would be appreciative. Anyways, let's move on to the gold chart real quick. All right, something is missing here. What is going on? Let me see. Oh, that's the wrong chart. There we go. And again, this is 30-minute time frame, and the Amazon chart was also a 30-minute time frame. So these are short-term moves. Okay, a lot going on, a lot of drawings on this chart. Okay, so ignore this purple line. It's a spiral. Okay, it's a time spiral. So I was trying to anticipate this break right here. This orange line here is a trend line for a potential triangle pattern on a bigger time frame, so ignore that. Ignore the purple spiral and the orange trend line if you can. Okay, so starting from this low right here around August 19th, we are going to count our waves and lead us to what I think might be a trend change at this time, as of today. So I followed, first of all, I got my 3 moves, followed the MACD. The trends were consistent, so my first A leg was here on August 22nd. This brings me to my B leg on our first degree. Okay, now as I'm counting these waves, I look for divergences, for smaller trend changes that I can consider different wave counts. Okay, so real quick, we'll try to follow through. Let me bring this MACD up and I'll try to walk you through this little lesson here. So starting on this low, you see the MACD follows the trend. We made the same corresponding moves. There was no lower low on a MACD and a higher high on the price. Okay, they were pretty much relative as far as the moves. So try to follow the white line as I'm moving. Okay, so and I'll use the MACD. Well, I'll point to both. So here's the low on the MACD, low on the price, high on the MACD, high on our price level. As we're coming down, we made looks to be like a 50% retracement. The MACD also similar. It was probably a little bit deeper, but the most significant thing you want to look for is that if it was a lower low. And in this case, it stayed relatively above the previous low. So this gives us our first count on a lower degree, and then we keep continuing the trend until we see a divergence. So this move up here gives us our A, and now we saw a more shallow retracement on price, and we saw a deeper retracement on the MACD. This tells me that this was my first wave count, thus holding above the price level of 33.95, not breaking our smaller degree A wave. Okay, so now I'm starting, that gives me my B wave to start a C count. Okay, and the C count will be subdivided as I go. So starting with our first smaller A degree, start with the MACD, we're moving up. Here's our high on the MACD, high on the price, low on the price, low on the MACD. It's consistent. High on the MACD, high on the price. That's consistent. Now we break down here and we make a higher low, and the MACD made a lower low. So and I have these dotted lines here that give me an indication of a bullish trend change, divergence. Okay, so this tells me that on a smaller degree that we need to be moving up for our C leg on a lesser count. So now as we're moving, and as long as it didn't break this 34.26, our trend is to the upside. All right, so now we made our lower, we're starting right here at our 34.26 level. MACD gives us our high here, price is high here at 34.55, MACD is here, price is here, that's relatively okay. Now we move higher in price, higher in the MACD, that's okay. Now our pullback stays above any significant price range, but our MACD dropped almost to the zero line, indicating another wave change. All right, so now we have our primary. It's a secondary primary. It's like a sub minuet count. Okay, so this gives me a B. Now we're looking for our C up in that lesser degree. Here's the start on our next move, and this one is going to be in 3 moves already. Yeah, and 3 moves here in the MACD. So this all fits for A. Now, as we're correcting here, we get a lower low on the MACD. I've indicated with this arrow because it was kind of hard to see, and this green line. So it was indicating a bullish. The green dotted lines would be a bullish divergence. The red dotted ones a bearish divergence, and then I have a yellow one indicating that it might be a trend change, overall trend change. But I don't have a yellow one on this chart. It'll be on the micro E-minis. I think I have one. So let's start again from A. We come down for a correction, but make a lower low on the MACD, indicating another wave change. So now we're up. This was a little bit big. Okay, yeah, I put these arrows here because this should have been a trend change, okay? Because we made such a strong low on the MACD, this should have broke lower, but because it stayed above 35.05 and really stayed above 35.35, this low here, and it held, this was bullish. So once price broke above 35.55, this gave me a good indication that this was just probably our last leg for this count, in which it was. All right, so now starting from here on our last subdivided count, we're moving up in 3. I got ahead of myself. So here's one move. So here's our high on the price. Here's our high on the MACD. But here's where it gets, it's more significant. It stands out more as far as this next divergence. So you can see this high on the price level at 36.03 and this MACD level at 12. This is where the MACD starts to break down. I have it indicated in red for a bearish divergence because price goes up, right? Price goes up, MACD goes down, so it made a higher high in price but a higher or lower high on the MACD, indicating a bearish move. Okay, now as long as it stays above, as far as each turn, if each turn stays above each of the A initial or the previous A leg, we're still in the same directional trend. Okay, so at this point, even though it came down all the way to 35.78 and made such a strong low on the MACD, this trend is still up because we bounced off a support and resistance line, okay, which was above the previous A leg. So this was no reason to get out completely of a long trade here. So now this, I don't know this at this time, but what I'm anticipating, this is the last move of this entire leg. So this is our last C leg in 3 moves. So starting at 35.79 roughly, we move up here to 36.12, which is okay with the MACD. Everything was relative. And then we came down to 35.90 roughly, and that's a nice dip there. That's relative. But here you see a higher high on the MACD and almost flat on price action right at 36.20. Now, this is actually a bullish divergence because the momentum on the MACD gives you the last blow off top, if you will, okay? Almost more or less, or more times than not, it's going to be a fake out, all right? This is what this is indicating, okay? So now we're flat on price, higher on the MACD. We come down just a little bit, make a higher low in regards to this low. So this is 35.99 in regards to 35.92. and we're a higher low on the MACD, bounce off the 0 line. This is where we get our push up to the 36.50 area. Now, you can see this correction starting to turn. If this correction goes below the previous A leg, this is our indication of a trend change. Okay, more confirmation will be actually when it gets past this lower degree of this leg, which is the 36.20 area. But I'm pretty confident that the 36.40 area is going to be my signal for a trend change to start looking for 3 waves down. Now again, I count everything in 3 waves. I do it a little bit different. It's based off Elliott wave theory, but I call it a new wave theory count, and I try to implement everything with Fibonacci sequences. Okay, so every target is a derivative of Fibonacci sequence. So right now you can kind of see that we were right on the 36.39 area, so it could go either way, but because of this earlier trend change that failed and now this big divergence, it's just looking like we're gonna have a correction off this entire move. Now, these targets up here are for the correction. All right, so the first one here is at 35.85-ish. Next one, and that's the 23.6. The next one is the 38.2 fib at 35.40. The 50% at 35.50. Wait, no, I have dyslexia. Sorry. 38.2 at 35.40, and then the 50% at 35.04, and then the 61.8 at 34.68. Okay, and if we break 34.21, it's a bigger trend. It's going to be a bigger wave down. So I probably should have notated that right here. Yeah, that's good. That's good. A little yellow arrow for a warning at 34.26. Did I say 24? No, 34. 34.26. I do have dyslexia. Okay, so a break below. Doing this with one hand, sorry. Indicates a bigger downtrend. Okay, helps if I can spell too. I know it's small, but I'll read it out one more time. A break below the 34.26 indicates a bigger downtrend. So, I think we have a lot of price action at 35.78. So I think we are going to go to here, get our bounce, and then head to. We're going to get real close to that bigger trend move down, so maybe something like that. And these targets over here, where they were for the previous moves up, I just want to leave them up there for later reference down the road for later instructional videos. So this is, for example, this A and this B. Once you get those two counted, the targets for the upside would have been 34.54 34.72, and whatever these three say. So yeah, so that's basically how I get targets for the upside and the downside. So, but that's for a later video. And so yeah, so watch for, let's see here, so the MACD, let's try to play this out. This for this bounce off of 35.78, we have a low right here that we need to break. So I would say that this might even, I've never really forecasted a MACD move before, but I would say that I don't know. I'm gonna have to keep an eye on that. But I would say that if this is my low on the price action with 3 moves here, I figure that if the MACD doesn't go at least past the 50% on that, that would be bullish, and I'm anticipating more bearish move. So I think that we're gonna break the 0 line on this first move down to 35.78. Yeah. Let's see what happens. So, all right, let's move to micro E minis real quick. No, I did the S&P. I did the index. Okay, that's right. All right, so we are in this wedge right now. Let's focus on just this closing move. Again, starting with the MACD, this is my low on September 2nd, 10:30 in the morning. From this low here, we're going to follow the MACD. Everything is up. We actually crossed a signal line, which is bullish, while we were consolidating for a B. So this tells me our C leg is about to pop, and because we have such strong momentum going into the C leg, any entry above 64.02 would have been okay. And then I don't have those targets up. The targets would have been, we'll put them out here to the side. Any move above 64.02 would have been a good entry, and then the first exit would have been 64.13, then 64.15, and then you start to run into this trend line. So profit taking would have been wise. You can see a gap up right here as we completed this wave. I know we made a higher high here, but this is going back to the chart about a year ago, where expanding flats were all of the trend changes, and it looks like we've got another one here. We're starting to see more expanding flats. That's what this was here, to get our bigger B wave for our C leg up here. We were almost a direct hit on the 161.8 from an earlier move. That's what this fib up here is indicating. So this gave me an indication with the trend line that we should probably be seeing a bounce down, or a rejection off that, which we did. So I've got 2 degrees of trend in 3 moves, and now I'm anticipating a trend change. So right now, as we were coming down, we broke our, well, we have not yet. We have not broke our previous A at 64.46, but it bounced right off of it. Also used the trend line for a reaction. So is what I'm thinking is this is like a perfect entry right now. Of course, it's the weekend, so it's not perfect, but because it'll probably gap one direction or the other, so you won't be a perfect entry. But if I had made this video a couple hours before the closing, then it would have been all right. But anyway, so is what a good strategy on this one for me would have been, again, I'm not a financial advisor. I don't, probably shouldn't even listen to me. But what I would do is because I'm looking for trend changes. Let's just start back over from this low here, MACD. We're moving up in 3. The MACD follows everything. It's all symmetrical here. We're good to go, making the same highs and same lows till we get to here, and then okay, so because of this low, because it didn't break that previous A, we are still bullish, and even this is, remember I was saying that there's a potential warning on the MACD. That's right, because we made a higher low right here and a lower low on the MACD. So this is telling me we may have a trend change. All right, because this is also telling me that this wave is complete, and we need another count to the downside, which will break this previous A leg. So that's telling me, anticipating a trend change. So the entry, if you can see this green candlestick right here, it's closed. The high was at 64.82, which is right at my 50, close to my 50% at 64.88 retracement. Now we can go all the way up to 64.99 for a retracement and still get this move down that I'm anticipating. But if we break the 6,500, then I'm thinking that we will continue to move to the upside. But watch for rejection off the trend line here. And I'll zoom out here to get a better look at that trend line. So looking for rejection somewhere between the 64.80 and 6,500 for a trend change down. Now, let's zoom out. And is what I am thinking is that this is an A down, a B up, need a C down. And I've got this B leg at a 161.8, which is my expanding flat turnaround that I'm starting to see again pop up in the charts. So if I see a 161.8 for a B, I want to see a 161.8 for a C. Doesn't have to be, but that's going to be what I'm going to be looking for. So let's go ahead, put the targets down for C. I'm going to get rid of this. We don't need those targets. Let's move this up a little bit. Try to squeeze everything in real quick. We're almost done. Let's close down the MACD. We don't need that anymore. We don't need those targets. Okay. So the target for C, if we stay below 6,500, will be first one. Well, the first one's going to be right where the A started. It's at 62.11. So I probably should go ahead and put a price level there. Put that on the right side. It actually says 62.13 or 62.14. It's pretty close. There's the price, 62.14. The 123 at 61.60. 138 at 61.28. And then I have an overlapping fib, so that's pretty significant. That's at 64.20. No, that is at 60.77. I think it's kind of hard to. That says 60.72, so somewhere between 60.72 and 60.77 for that 161. Because they're overlapping, one of them might play a more significant part. So, anyways,